You were listening to chartingwealth.com for Friday, the 29th of April, 2016. We're going to jump right into things. What do we see going on in the total market? As of Thursday close, well, we see the total market down 1.07%. We had a crossover on our two-day trend line. That was many days ago. We've tried redrawing it, but it's gone now as far as that upline goes, because as the market closed and as the candle closed out, we have a crossover. It appears, now we're going to verify that when the market actually gets going on Friday. But we saw the market dragging along sideways. We saw the S&P 500 dragging along sideways. We saw the Qs rolling over the last few days, going down. That's the Nasdaq 100. And we warned you that when the Nasdaq 100 starts crashing like that, the rest of the market is not far behind, and we were correct. So we are looking for a confirmation when the market gets going and the new candle starts forming on the two-day chart as to a crossover going down. Again, market down 1.07% for the day. If we look at the intraday on the IYY, we can see lots of down movement. In fact, that's almost 3 times the size of the down candle. There was also a bit of an up movement. We saw lots of movement down in the afternoon, a little bit of movement up in the morning, but the market rolled over in the afternoon down hard. Now, if we range back out to our two-day chart and we take a look at the S&P 500, what do we see? Well, we can redraw our trend line. We're actually just going to need to get rid of it for now. That we'll have to redraw it when we actually have a confirmed crossing over, which it looks like, yeah, at the end of the day, we actually did have a confirmed crossover going down. 2 spinning tops in a row, actually 3. Lots of weakness in the market. First, an open box. Open red box down back on the 22nd, followed by another at the beginning of the week on the 26th, and then the 28th of April down box. Also 2 red filled in down boxes on the two-day chart. Now, if we go to the 4-hour chart, what do we see? Down movement in the morning, followed by strong down movement in the afternoon. The S&P 500 was down 0.91%, so not quite a percent for the day. Again, the total market down just over a percent at 1.07%. Remember, the S&P 500 crossed over on the short chart going down back on the morning of April the 22nd. So that is what we have seen carry on throughout the course of the week. Down on Friday, followed by down on Monday. A little bit of up on Tuesday, and really just sliding sideways throughout Wednesday, Tuesday afternoon and Wednesday, and Thursday morning, and then down hard Thursday afternoon. Huge wick at the bottom. A pretty large wick at the top, with about 1.5 times the down movement that we recorded in our Hinkin Ashi, which is the average pace in Japanese. It's the kind of candlesticks that we use. So we see, again, the market crossing over, going down. Now remember, if you want to practice your inverse trades when we find one to get into, remember, for those of you who've been studying the market for a while, or even those just getting in, all we're talking about are practice trades. You should already have your account open. If you don't, go ahead and open one at any of the online brokerage firms, whoever they may be, whether it's Schwab or Options Express or TD Ameritrade or whoever else, the myriad. Go out there, open up an account, get yourself a virtual account, become a virtual millionaire, and then practice your trading. Now, here's something to look at. Inverse funds, as the market starts going down hard, remember, SH is the inverse of the S&P 500. It goes up when the market goes down. S is in Sam, H is in hotel. And also QID, because we're about to go to the Nasdaq 100 as represented by QQQ. What do we see on that two-day chart? Well, we called this a few days ago when it crossed over going down after, well, it'd be on the candle of the 26th, that two-day chart. We've continued to see strong down movement. In fact, the Qs was down over the course of Thursday, 1.21%. as we go into Friday. So strong down movement, derivative oscillator strong down, along with the MACD having crossed over back on the 26th. Three big strong down candles moving down. And we had an open red box down back on the 20th. So the Qs has been going down strongly. And again, the inverse fund for the Qs, QID, as in Quebec, India, Delta. Now the Qs crossed over going down way back on the 19th of April. Slid along for a while, then dropped over hard on the 22nd, slid around from the 25th through the 26th, and then started going down again on the 27th. The market, as far as the Qs went, the Nasdaq 100 up some in the morning and then strong down moves. Again, all of our charts showed huge down moves. The market recovered some, but even below the Bollinger Band, that's our volatility bands. So, confirmed down moves on the Qs, on the Nasdaq, that's the Nasdaq 100, and on the S&P 500. Still waiting to see that confirmed crossover going down on the total market. Now we're going to range back out to our 2-day chart. Take a look at gold. As the market goes down, gold goes up. Still don't have a crossover yet on the 2-day chart on gold going up, but gold up heavy today, 1.89%, almost 2% for the day. But look at that, gold has still not recovered. Well, it has. It closed a little above the up move that gold went to back on the 12th. So it has recovered from that peak. So it's a little above where it was on the 12th of April. Gold has started moving up. Still don't have a crossover yet on the MACD going up on the 2-day chart. We'll be waiting for that. What do we see on the 4-hour chart? Well, 4-hour chart crossed over going up on the morning of the 27th. And then shot up strong both in the morning and afternoon on Thursday, the 28th. So continuing to see if gold's going to have that crossover yet on the 2-day chart. That is where we have ended the day on Thursday. Strong down day on our 3 indexes, the total market, the S&P 500, and the Nasdaq 100. Strong up day. On gold, we do have crossovers on the S&P 500 and the Nasdaq 100 on the big chart. So we're now in a bearish, that is a down mode on those charts. We're waiting for a pullback to see a good entry point on our 4-hour charts on those and waiting to see if the down move is confirmed on IYY. Everything is, again, a go for us to start looking at abilities to get into the down moves. And again, look at SH for an inverse of the S&P 500 and QID for an inverse of the Nasdaq 100. Gold, of course, is going up. That's where we are. We'll give you an update after the market closes over the weekend for Friday, and that is for actually the following Monday. And we'll also be recording over the weekend our weekly review and forecast. If you have questions, concerns, issues, give us an email. Shout out to us on Facebook, Twitter, Instagram, YouTube. We love to hear from you. And also, if you appreciate what we do, do us a favor. Go to iTunes. Say something nice about us. Give us a 5-star rating. You can also subscribe there to our daily podcast. And as a separate podcast, our weekly video podcast, weekly review and forecast. Thank you so much for listening. We appreciate you. Let us hear from you at chartingwealth.com.